could you maybe just tell us a little bit about the work you did on Wall Street?
Okay, so I started my career at Lehman back in 2001. I was part of their foreign exchange division. So I traded foreign exchange, mainly Latin American currencies, so Mexican peso, Brazilian real, Argentine peso, etc. And we'll not go into too much details, but each market is sort of very unique. Each currency has its own sort of feature, something called convertible or not convertible. So some of the currencies were convertible, some were not. It's a practically 24/7 market, and so I made markets for customers, which means like when a customer calls and say, hey, I want to buy 100 million Mexican peso, what is the price? So I will give them a price for Mexican peso in dollars. So they will give me dollars and my bank will give them peso, which they can use in whatever investment they want to make, etc. So that's just one market, right? That's called spot market, where you trade currencies. They pay you money in 2 days and you give them currencies in 2 days. Then there's something also called futures market. So let's say they don't want pesos now, but they want it in 1 month's time. But they want to make sure that the price doesn't change too much. So they can actually buy those currencies now, but we give them peso in a month's time and they pay us dollars in a month's time. So that's a different market. And I obviously made markets for that, which means I give them a quote. If they want to buy peso, I'll give them a price. If they want to sell peso, I'll give them a price. And the way it works is we usually have different prices for buying and selling. We buy at a lower price and sell at a slightly higher price, and that's how the bank makes money. So that's spot and futures market. There's also something called forwards market. There's similar things on exchanges where you have futures. So many different basically products for currencies, and my job to make sure that I follow all the markets and make sure that prices that we are quoting are they make sense, because sometimes if one market has a different price and another market has a different price, customers can buy from you at a cheaper price, sell it in the other market at a higher price and make a lot of money, and you are actually taking the loss. So it's a very fast moving market, and my job is to make sure that my prices are aligned, my risk is under control. Then same thing with other products called interest rate swaps, so where we do the same thing, but it's a much more complicated mathematical product. It's like bonds, but slightly different. So I did that for a lot of years, about 7-8 years, and then I moved to hedge fund side where I actually did more investment.
Okay, so just a quick follow-up about sort of your work with currencies. What type of research went into that? Was it more macro indicators that you were looking at, or?
It is both macro and micro. So there are a few things that are super important, right? Macro is obviously the overall economical perspective, and currency trading is based on overall what your perspective is on the country. How is it going to do over short term, long term, medium term? That's where economics research comes in. Banks have a lot of economists that they do detailed research. They look at every single piece of data that's coming out, piece it together. They send out the reports. Traders, they have their own research on top of that, because sometimes we agree with them, sometimes we don't agree with them. So we have our own view. Then there's a component on central bank. All of these things are important, but the central banks also make decisions in terms of changing interest rates, and that have a very big impact on the currency market. If they raise the interest rates very quickly, then the currency appreciates a lot, although it's supposed to appreciate. So there are all this weird things that you need to sort of know and be aware of. So that's another component. And last is what we call arbitrage, like the markets that I talked about, futures, forward, spot. There's different price in every single one of them, but they are very closely aligned. And if you don't keep track of that, then you can get arbitrage, which means people basically buy from you at lower price and sell it to you at a higher price, and you are losing money every single transaction instead of making money. So that's a third technical feature that you have to be always attuned to, because over long term, even if you're right, you get the technical pictures wrong, you can end up having a lot of losses. And then these markets are humongous. In one day, we can trade anywhere from hundreds of millions or billions of dollars of worth of notionals. Overall, it's $1 trillion plus market.
So these markets are constantly moving. So what does your like typical day look like? Are you up and late in the night or?
So for me, at least because it was Latin American market, it's a fast-moving market, but there's still sort of reasonable hours because it's primarily traded in North America. So I would get up at like probably like 4:30 or 5, be at work by 6 o'clock, and by 3:30 or so the market is practically finished. So then from 3:30 to 5 or 5:30. We close our books, we do the accounting, we manage the risk, and we prepare for the next day research, etc. But then sometimes we also trade what is called G7 market. G7 is the dollar, euro, dollar, Canadian dollar, Australian dollars. Some of those markets are 24/7 markets. So when you trade those markets, it's usually not just one person trading it, it's a global team. So there will be a person sitting in New York office, there'll be a person sitting in Hong Kong office, there'll be a person sitting in the London office. And what happens is, because these markets are open 24 hours, everybody sort of works about 8-hour shift. When London closes, New York is usually opening. So New York person takes over from the London trader. New York closes, Hong Kong is about to open. So Hong Kong person takes Hong Kong, or Singapore trader takes over from the New York. And the risk management happens 24/7.
Got it. Awesome. Very cool. Okay, and then just for more of an application, I guess, or some of the experiences that you had, is there any recommendations that you might have for students or young adults sort of looking to pursue a career in the financial industry on Wall Street?
Do more math for sure, right? So, so financial industry, there's basically interest rates are very important, right? Like whether you are on equity side, whether you are on bonds and currency side, interest rates are very essential. So you have to understand obviously exponential functions and linear models very well. On top of that, we also are heavy users of statistics. So statistics is another important area. Calculus also plays a big part because we have what we call stochastic calculus. A lot of this fancy instruments that are traded nowadays, which are called derivatives or options, the mathematical models are based on stochastic calculus, so you need to understand that. Economics is another big component. At the end of the day, if you really want to be successful at a high level in finance, then these details are bare minimum what you need to know. But economics is much more fundamental. You need to be able to have economic understanding, see how the country's economy is developing, what are the potential economic trends, and you also have to have sound business judgment. So it's a combination of a lot of things. I think in terms of what you can do at school is financial literacy, obviously a lot of math, and economics and statistics. Those are the important classes that you can focus on.
Yeah, and I know that computer science has become recently a lot more hot, especially within the financial industry. Do you recommend that students pursue something there, or maybe like in your previous work, were you using
computer science is definitely essential, but let me put it this way: computer science is when it comes to finance, it's a means to an end. If you are good at computer science, you will definitely be very, very attractive for a lot of banks because we need to do a lot of modeling, especially when you join as an analyst, etc. And computer science is very, very handy. If you can write a program in Python or R, very, very useful, very critical. But as I said, it's a tool, it's a means to an end, and you need to be able to basically understand the basics of the finance, whether you are on the equity side or whether you are on the fixed income currency side. You need to understand the fundamental concepts. And computer science or coding can be helpful in implementing those in a very, very efficient manner, which is what I was also doing early on. Like I would build tools in the models in the spreadsheet, and I would need to know VBA in order to program a lot of those things. But that in itself is not going to get you far in finance, because at the end of the day, finance is basically its own subject, right? Like, you can be very good at programming, but you need to understand what makes sense from finance perspective.
Awesome.